Thank you for watching this video. Today we will be doing technical analysis on the stock market for the week ending Friday, November 27th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. This week, the S&P 500 was up 2.28%, and we closed at 3638.69. The first chart that we're going to look at is a 3-year weekly candlestick chart of the S&P 500. So each candlestick does represent 1 week of trading. The blue line is a trend line that I have drawn over the peaks in the market over the last 3 years. So going clear back to January of 2018. And what we can see here is every time the market has gone up to this trend line, it has hit that and deflected lower and corrected. And it's happened, several times. Well, now this week we have closed above this trend line. So one of two things is going on here. Either we're, at the top of the range and we're going to correct, right? Because perhaps we're overextended here and we're going to roll over within the next week or two, which is completely, possible and if anything, probable. Or it is possible, based on all of the stimulus and the super low interest rate environment that we're in, and the likelihood of fiscal stimulus somewhere in January or February, it is possible that these markets are shifting into a new higher gear and that we will trade above this trend line on a go-forward basis. So there's just no way for any of us to know at this point. We can speculate, we can take a guess, but this is something we will need to keep our eye on a go-forward basis because, again, one of those two scenarios is going to play out. Either we've overcooked ourselves here and we're going to roll over and correct as we have the last several times we've hit this upper trend line over the last 3 years, or we have now shifted into a new higher gear based on the fact that there is no alternative for equities, right? The TINA effect, super low interest rate environment making bonds less attractive and equities more attractive on a relative basis, and thus also allowing equities to trade at a higher than historically normal PE ratio. So I know I'm throwing a lot at you here, guys, but it is possible that that is what's going on here. And based on what happened across the markets this week, which we'll see in the next few charts, that is a very likely scenario, right? We've come a long way in a short period of time, but based on these low interest rates, based on the massive amount of stimulus that's already been thrown into the markets, and perhaps more stimulus to come, it is possible that the equity markets are telling us that that we're going higher from here. So stay with me here for the balance of these charts. It's definitely interesting week, and we're one way or another, we are at an inflection point. The next chart that we're going to look at is a 3-year weekly candlestick chart of the triple Qs. Of course, the triple Q is the NASDAQ 100 ETF. And what we can see here is that this ETF was up 2.86% this week and closed at a new all-time weekly closing high. And by the way, if I didn't point it out, and it's not apparent, right, we had a new all-time weekly closing high in the S&P 500. So if I didn't completely point that out, forgive me. But we have a new all-time weekly closing high on the triple Qs after the triple Qs had corrected for several weeks there and have kind of been languishing since the end of August, beginning of September. The triple Qs had really just been consolidating, but had a really nice week, up 2.86%. Still not closing on a weekly basis above this 300 level on the triple Qs, but we're getting very, very close. The next chart that we're going to look at is a 3-year weekly candlestick chart of the Dow Jones Industrial Average, for those of you that like to follow this index. And the Dow was up 2.21% this week and closed at another all-time weekly closing high, barely missing closing at the 30,000 level on a weekly basis. Of course, earlier this week we had one day where we closed above 30,000, and I do have a video on my channel about that if you missed it, so go out and check that out. But we did close at 29,911.03, so we're getting very, very close to the 30,000 level on the Dow for a weekly closing high. We've done it once on a daily basis, but perhaps over the next week or two we can get above that and close above that on a weekly basis. The next chart that we're going to look at is a 3-year weekly candlestick chart of the IWM. The IWM is an ETF that tracks the Russell 2000 Small Cap Index, which of course is a very broad-based small cap index here in the U.S. And just like what we saw in the S&P 500, the triple Qs, the Dow, the Russell 2000 ETF, the IWM, closed at another all-time weekly closing high, up 3.73% for the week. And after going sideways for over 2.5, almost 3 years, the IWM now has really put in a nice run over this last month. So this is really good news potentially on a go-forward basis, because what I have observed over my decades of investing and trading is that the market is healthiest when small caps are leading the way, and that is what we have been seeing over the last month. So this potentially is a really, really good sign on a go-forward basis. But again, we will want to continue to see small caps leading the way, and we will want to continue to see things like the S&P 500 continue to close at new all-time weekly closing highs on a go-forward basis and stay above this long-term trend line. And to take another look at this, let's now take a look at a 7-year monthly candlestick chart of the S&P 500. Just to back away and really get a big picture view of this, and I did the same thing. I drew the trend line across the monthly candles going clear back to 2018, and you can see here on a monthly basis we're up 11.28% on the S&P 500, and we do have one more trading day for the month of November, so that could change up or down slightly on Monday the 30th. But you can see here huge upside candle in the S&P 500 for the month of November, and you can see that on a monthly basis, just like on the weekly charts, right, where we're closing above this trend line, on a monthly basis on the S&P 500, we have also now traded above this overhead trend line. So again, it suggests that one of two things are happening. Either we're really, really overextended here and we're going to have some type of a pullback, and who knows, how big that might be, right? 5 to 10% is pretty normal. It normally happens several times a year in the stock market as just a normal course of events. So that is a definite possibility here, guys. But the other thing that the markets could be telling us, based on small caps breaking out, based on the Dow moving on to new highs, based on the triple Qs having consolidated for the last couple months and now closing at all-time highs again, these markets again could be shifting into a new higher gear. And looking forward, as the markets do, to 2021 and even 2022, and getting back to a quote-unquote more normal environment where unemployment is dropping, we have vaccines, we have treatments for COVID-19, and so one of those two things is happening here, guys, and only time will really tell which is going to be the right answer. So we will want to pay close attention to these markets. So we really want to stay in tune with and in sync with the stock market and not fight it one way or the other. And guys, this is also where Simple Market Signals is so important. Simple Market Signals, for those of you that don't know, is my own personal risk management model. It took me over 20 years of research and development to put this together. Finally came together in 2017. And once I realized what I had, and I realized there are so many people out there, whether they're financial professionals or individual investors, that need this information. That's why I built a business around it, okay? And so if you are interested, if you want an advantage, if you want to be able to stay in sync with the markets, whether they're going up, down, or sideways, if you want to see what I have to offer, and guys, it's very, very cost effective, okay? For most of you, it's probably going to cost you money not to be a subscriber to my service. And I think once you go through this, you'll understand what I mean by that. In lost opportunities, right? In lost profits, in not staying in sync with the market is so important. And I don't care. You go back and look at Bill O'Neill's stuff. You study Jesse Livermore. You study any of the great traders from over this last century. Okay, the great traders and investors. One of the most important things as an investor, as a financial advisor, as a trader, one of the most important things that we have to do is stay in sync with the markets. Okay, and every great trader and investor really has emphasized that, and that's where Simple Market Signals has really helped me. Even though I have decades of experience, I needed something that helped take the emotion out of the decision making and gave me additional insights and advantages that traditional technical analysis doesn't provide. So with that said, I'm going to tee up some more information about Simple Market Signals. I hope everybody had a great Thanksgiving. Have a great weekend, and I will talk to you on Monday. Do you have a stock market risk management system? Something that helps you understand the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the short-term trend on an ongoing basis? Do you know the direction of the overall trend in the stock market? My system is called Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecasts, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including in numerous bull and bear markets. And what I found is that certain conditions exist during these various market phases. And then based on that information, I created simple, easy to understand signals around these different phases of the market. And the thing is that most people don't know about or have access to the data necessary to do the research that I had to do to put together this model. Now let's take a look at the signals. The red signal has the highest equity risk associated with it, and the worst sell-offs, including bear markets, will happen when the signal is red. When the signal is yellow, this means that equity risk is moderate, and sideways to slightly up or down price action is very common during a yellow signal environment. The green signal is the best signal. It has the lowest equity risk associated with it, and most all upward progress in the stock market will be made in a green signal environment. Said another way, it is very hard to make money in equities unless the signal is green. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Now let's take a look at the first 3 months of 2020 so you can see how Simple Market Signals could have helped you in the most recent downturn. We know that we came into the year with a strong stock market, so we had a green signal for the majority of January, but on January 27th, the signal went yellow for a couple of weeks. We went back to green in the first part of February, and I warned my newsletter subscribers on Saturday, the 22nd of February, that I felt like the market was starting to roll over and that things were changing. And so I gave people a heads up right here over the weekend, and I told them that if the market continued to sell off, that we would probably see at least a yellow signal, if not worse, the following week. And that's exactly what happened. On the 24th, the simple market signals risk signal went yellow. Now, one of the other things that I want to point out here is, in addition to the risk signal, I also have several trend direction indicators in this simple market signals model. Now, the longer term one is called the general trend indicator, and the general trend indicator went negative on the 25th. So on the 24th, the signal went yellow. The general trend indicator went negative on the 25th, and then 2 days later, the signal went red. The risk signal went red. So think about this. All in 1 week, just a few days apart, we had a yellow signal, we had the general trend indicator went negative, and then we had the risk signal went red on the 27th. That was Thursday, all right? And by the way, this general trend indicator is a positive negative signal, and it operates totally independently of the risk signals. It's just trend. So the general trend indicator gives you still another way to monitor and control risk in your portfolio. And guys, that general trend indicator had been positive since October and then went negative. So right there, just those two signals alone told us that something was changing in the stock market. And then by the 27th, the signal had went red, and we can see here that the market fell from there. As part of the simple market signals model, there are three powerful indicators. There's the simple market signals proprietary risk level signal. There's the short-term trend indicator, which helps clarify short-term moves in the overall U.S. stock market. And a normal signal length for the short-term trend indicator is anywhere from 1 or 2 days to 7+ weeks. Then there's the general trend indicator, which is designed to stay positive during the bulk of most uptrends and negative during the bulk of most downtrends. And a normal signal length for the general trend indicator is anywhere from 2 weeks to 5+ months. We disseminate the information through the Simple Market Signals weekly newsletter. In the weekly newsletter, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the short-term trend indicator signal. You will also receive the general trend indicator signal. You will also receive market and sector performance information over multiple time frames. You will receive a recap of what happened in the stock market for the past week. You'll also receive technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information every week in the Simple Market Signals newsletter. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here, okay? The newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service, and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an email newsletter, so we will have to have your best email address on file, and make sure this box is checked, because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. Now, when you subscribe, okay, understand that everything is tied to your email on file. All right, so once you subscribe, you go out to the website, simplemarketsignals.com, and it'll take you maybe 5 minutes to subscribe. It's pretty easy, and you just follow the prompts, and then your email on file is then going to drive everything going forward. This is an emailed newsletter subscription. That's how we disseminate the information, and you should get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter that is automatically generated once you subscribe. So if you don't get that welcome letter beyond your confirmation, okay, of the subscription, if you don't get that welcome letter, if you don't see it in your in basket, then go check your spam, your junk, or your promotion folders, especially in Gmail. Having a lot of people that are having the newsletters and everything coming from Simple Market Signals going into the promotion folder. So please make sure that you check your spam, your junk, and your promotion folders. And also understand that the newsletters go out on the weekend. All right, so the goal is to get it out Saturdays by 2 p.m., but it could be any time over the weekend, depending on how long it's taken me to do the research necessary for that week's newsletter. But I try to get it out by 2 p.m. Eastern Standard Time every Saturday if I can. Again, earlier if I can make that happen. And then the next edition, right, once you subscribe, understand that the next edition, right, so if you just subscribe on a Monday, Tuesday, Wednesday, whatever, the next regular edition is going to be set out on Saturday. All right, and then once you subscribe, we will send you, as soon as we can, the latest edition, but we have to send that out manually. So just be patient with us. But again, within a day or two of your subscription, if you don't get this latest edition, then go back and check your spam, junk, and promotion folders, because it's probably hidden in there. All right, so you should get the automatic welcome letter, and then the latest edition within the next day or two of your subscription, and then again the standard newsletter goes out every weekend, but we try to make it no later than 2 p.m. Eastern Standard Time on any Saturday.